I need you to sit down for this one. I need you to clear your mind and focus. Because what I am about to tell you is something that would have gotten me laughed out of any trading room on Wall Street just 12 months ago. We are talking about $80 silver, not as a fantasy, not as a distant target on some permabull's dream chart. We are talking about $80 silver as an imminent reality. We are talking about a price level that is so close right now that you can almost touch it. And when we break through it, and we will break through it, the consequences for the short sellers are going to be catastrophic. Silver has rallied again in the early hours of Tuesday. The buying pressure is relentless. Every single dip gets purchased. Every single pullback gets absorbed. The bears have thrown everything they have at this market, and they have failed. They are exhausted. They are bleeding. And they are about to experience the final capitulation that will send silver screaming past $80 and directly toward $84. In this broadcast, we are going to dissect the technical battlefield. We are going to explain why 80 is not just a number, but a psychological fortress that has been holding back the flood. We are going to show you what happens when that fortress falls. We are going to look at the $70 floor that is supporting this entire rally and explain why it is the line in the sand that the bulls must defend. We are going to talk about the leverage trap that has already destroyed retail traders in the last 48 hours. And we are going to give you the survival strategy you need to navigate the most violent silver market in modern history. The clock is ticking. The pressure is building, and the breakout is coming. Let us begin. First, let me paint the picture of where we are right now. Silver is pressing against $80 like a coiled spring. Every session, it pushes higher. Every session, it tests the resistance. The buyers are showing up with size and conviction. They are not nibbling. They are not testing the waters. They are accumulating aggressively because they know what is on the other side of 80. And what is on the other side is blue sky, open air. No resistance, no bag holders waiting to sell. Just a clear runway to $84 and beyond. Think about what $80 silver means. A year ago, if you had told any professional trader that silver would be knocking on the door of $80, they would have questioned your sanity. They would have shown you charts from the last decade where silver struggled to hold $25. They would have pointed to the years of sideways grinding, the failed rallies, the relentless suppression, and they would have told you that $80 was impossible. Yet here we are, standing at the gates of impossible. And the gates are about to swing open. The $80 level is not just technical resistance, it is psychological resistance. It is a large round number that carries weight in the minds of every trader watching this market. Round numbers act as magnets. They attract price action. They become battlegrounds where bulls and bears clash with maximum intensity. And right now, the bulls are winning every single skirmish. They are pushing the line forward. They are establishing higher lows. They are building the momentum that precedes a breakout. When a market approaches a major round number like $80, one of two things happens. Either the resistance holds and price reverses, or the resistance breaks and price accelerates. There is no middle ground at these levels. The energy that has been building has to release in one direction or the other, and every single indicator I'm looking at tells me that the release is going to be upward. The path of least resistance is higher. The sellers are exhausted. The buyers are emboldened. The setup is textbook. Let me explain what happens when $80 breaks. The moment silver trades above $80 on a closing basis, every technical system on the planet is going to trigger a buy signal. The algorithms that trade based on breakouts will flood the market with orders. The momentum traders who have been waiting on the sidelines will rush in to chase the move. The short sellers who have been praying for a reversal will be forced to cover at any price. This confluence of buying pressure will not push the price up gradually. It will catapult it. The immediate target above $80 is $84. That is not a random number. That is the next zone of consolidation on the long-term charts. It is where the market will pause to digest the breakout before deciding whether to push even higher. The move from $80 to $84 could happen in days, not weeks. When resistance breaks after a prolonged battle, the follow-through is typically swift and violent. The trapped shorts do not have time to plan their exit. They just have to hit the buy button and accept whatever price the market gives them. But here's the thing you need to understand. Even if we do not break $80 today, even if we do not break it this week, the direction is clear. You cannot short this market. Let me say that again, because it is the most important sentence in this broadcast. You cannot short this market. The trend is too strong. The momentum is too powerful. The forces driving silver higher are too fundamental to be stopped by a chart pattern. Every attempt to short silver in 2025 has ended in pain. The traders who thought they were clever, who thought they could catch the top, who thought they could fade the rally, they have been systematically destroyed. The market has no mercy for those who fight the trend. And the trend is up. Not just up, screaming vertical, parabolic up. This is not a market where you look for shorts. This is a market where you look for pullbacks to buy. Let us talk about those pullbacks. The $70 level is the floor. It is the line in the sand. It is the support zone that must hold for this bull market to remain intact. As long as silver stays above $70, every dip is a buying opportunity. Every red candle is a gift. Every moment of weakness is a chance to add to your position at a discount. The buyers know this. That is why the dips keep getting bought. That is why the market refuses to give back its gains. The floor is solid. But what happens if $70 breaks? What happens if the bears manage to push the price below that level? Then the calculus changes dramatically. A break of $70 would signal that something has shifted in the structure of the market. It would suggest that the buyers have finally exhausted themselves. It would open the door to a deeper correction, potentially back toward the 60s or even lower. This is the scenario that the bulls are fighting to prevent, and so far, they are succeeding. The reason $70 is so important is because it represents the point where the current rally began its acceleration. It is where the market broke out of its previous trading range. It is where the institutional buyers stepped in with conviction. A return to $70 would mean that all of that progress was noise, that the breakout was a false signal, that the rally was built on sand. I do not believe that is the case, but I want you to be aware of the risk. I want you to understand both sides of the trade. This market is not for the faint of heart. Now let me address something that has been happening beneath the surface, something that the headlines are not covering, something that has already changed the lives of real people for the worse. In the last 48 hours, silver has moved $10 in a single swing, $10 per ounce. On a standard futures contract, that is $50,000 per contract. I know traders who were short this market with leverage. I know traders who thought they could handle the heat. They are no longer in the game. They are gone, wiped out. Their accounts have been liquidated, and they are staring at screens wondering what happened. This is the leverage trap. This is the hidden danger that nobody talks about when the market is ripping higher. Everyone loves volatility when it is going in their favor, but volatility cuts both ways. The same force that turns a small position into a fortune can turn a leveraged position into a catastrophe. The silver market in 2025 is not a place for reckless leverage. It is a place for disciplined position sizing and respect for the power of the move. I'm not telling you this to scare you out of the market. I'm telling you this so that you survive the market. The goal is not just to make money. The goal is to stay in the game long enough to see the ultimate target. And the ultimate target is not 80. The ultimate target is not 84. The ultimate target is generational wealth built on a position that you held through the volatility because you sized it correctly. Let me give you a practical framework. If you are trading silver with leverage, your position size should be small enough that a $10 move does not threaten your account. It should be small enough that you can sleep at night. It should be small enough that a spike in volatility does not force you to make emotional decisions. The traders who got wiped out last week were not stupid. They were greedy. They wanted maximum exposure, and maximum exposure became maximum destruction. If you are holding physical silver or silver ETFs without leverage, you have a different calculus. You can afford to ride the swings because you are not at risk of liquidation. The volatility is uncomfortable, but it is not existential. You can wait for the dust to settle and the trend to resume. This is the advantage of the patient investor over the aggressive trader. The investor sees the multi-year picture. The trader sees the multi-hour picture. In this market, the investor wins. Now let us zoom out and look at the bigger picture. Why is silver at $80 in the first place? Why has it doubled in 2025? Why are we even having this conversation? The answer is not technical. The answer is fundamental. The world is changing. The monetary system is shifting. The demand for hard assets is exploding. And silver is at the center of all of it. The Federal Reserve has signaled that rate cuts are coming. Every rate cut weakens the dollar and strengthens the case for holding silver. The geopolitical landscape is fracturing. Every crisis sends a new wave of safe haven demand into the precious metals market. The industrial demand for silver is insatiable. Solar panels, electric vehicles, electronics, medical devices, defense systems, they all need silver. And the supply cannot keep up. This is why the rally is not a bubble. This is why the rally is not speculation. This is why the rally is sustainable. The forces driving silver higher are not temporary. They are structural. They are baked into the fabric of the global economy. The green energy transition needs silver. The de-dollarization trend needs silver. The breakdown of trust in fiat currency needs silver. Every major theme of the 2020s points to higher silver prices. But even within a structural bull market, there are cycles, there are waves. There are moments of maximum optimism and moments of maximum fear. We are currently in a moment of maximum optimism. The price is extended. The momentum is extreme. The headlines are bullish. This is the environment where corrections are born. Not because the trend is over, but because the trend needs to breathe. When the correction comes, and it will be vicious. That is not my word. That is the word of every experienced trader watching this market. The higher we go without a pullback, the more violent the eventual pullback will be. The weak hands who bought at the top will panic. The leveraged traders who ignored risk management will be liquidated. The algorithms that chase momentum will flip to the sell side. The correction will feel like the end of the world. But it will not be the end of the world. It will be an opportunity. The smart money is not afraid of corrections. The smart money welcomes corrections because they provide entry points. If silver corrects from $82 back to $72, the headlines will scream about a crash. The retail traders will capitulate, and the institutions will be backing up the truck to buy at a discount. This is how markets work. They scare out the weak hands to reward the strong hands. Your job is to be a strong hand. Your job is to see through the noise. Your job is to understand that a pullback is not a reversal. The trend is up. The structure is bullish. The fundamentals are supportive. As long as $70 holds, every dip is a gift. Say that to yourself. Every dip is a gift. Write it on a sticky note. Put it on your monitor. Because when the red candles start printing, you're going to need that reminder. Let me give you the scenario analysis. Scenario 1, silver breaks $80 this week. The immediate reaction is a surge toward $84. The shorts cover. The momentum traders pile in. The headlines shift from skeptical to euphoric. We enter the acceleration phase of the rally. In this scenario, there is no opportunity to buy the dip because there is no dip. The train leaves the station and does not look back. If you're not already positioned, you are chasing. Scenario 2, silver fails at $80 and pulls back. The bears get excited. The headlines shift to bearish. Retail traders who bought the breakout attempt panic and sell. The price drops toward $75 or even $72. But then the buyers step in. The support holds. The rally resumes with renewed energy. The failure at $80 becomes a higher low, setting up an even more powerful breakout attempt. In this scenario, the pullback is the opportunity. Scenario 3, silver fails at $80 and collapses through $70. The trend changes, the structure breaks, the bulls are defeated. The price enters a deeper correction toward $60 or lower. This is the bearish scenario. It is the scenario that the short sellers are betting on, and I do not believe it will happen, but I acknowledge that it is possible. Every trade has risk. Every position can go against you. The difference between a professional and an amateur is that the professional has a plan for every scenario. What is your plan? Do you know what you'll do if silver breaks $80 tonight? Do you know what you will do if silver drops to $72? Do you know at what point you will add to your position? Do you know at what point you will reduce? These are the questions you need to answer before the move happens. Not during, not after. Before. Because when the price is moving $5 in a session, you do not have time to think. You only have time to execute. Let me share something personal. When I first started covering silver years ago, the idea of $50 silver felt like a stretch. The $50 level was a psychological barrier left over from the Hunt Brothers squeeze in 1980 and the brief spike in 2011. For decades, silver failed to reclaim that level. And now we are talking about $80. We have blown past $50 so fast that nobody even remembers it. We have entered territory that the old-timers said was impossible. This is what happens in a true secular bull market. The price does not just meet expectations, it exceeds them. It makes the skeptics look foolish. It rewards the believers beyond their wildest dreams. And then it keeps going. The silver bull market is not over. It is not even close to over. We are in the early innings. The masses have not yet arrived. The mania has not yet begun. When your neighbor starts asking about silver, when the taxi driver gives you a silver tip, when CNBC is running hourly segments on how to buy silver, that is when you know we are near the top. We are not there. We are not even close. The current price is being driven by institutions, by sophisticated investors, by people who understand the macro environment. The retail wave is still ahead of us. And when retail comes, they do not come gently. They come in a frenzy. They buy at any price because they are afraid of missing out. They push the market to levels that the fundamentals do not justify. And that is where the real money is made. You want to own your silver before the retail wave arrives. You want to be positioned before the euphoria. You want to be the seller when the masses are buying. But that is a problem for tomorrow. Today, the problem is $80. Today, the problem is whether we break through or pull back. Today, the problem is managing your position so that you survive the volatility. The short-term noise is deafening. The long-term signal is clear. Let me give you the framework one more time. $80 is resistance. It is the barrier. It is the level that everyone is watching. When we break it, $84 opens up immediately. The shorts will be destroyed. The momentum will accelerate. The headlines will turn euphoric. This is the scenario I expect to play out. $70 is support. It is the floor. It is the level that must hold for the bull market to remain intact. If we pull back, this is where we find buyers. If we break below it, the structure changes. This is the scenario I consider unlikely but possible. Your job is simple. Stay above $70 in your mind. As long as the market respects that level, you are a buyer. You buy the dips. You add on weakness. You position for the breakout. If $70 breaks, you reassess. You reduce risk. You wait for clarity. This is not complicated. It just requires discipline. I want to end with a thought about time. A year ago, $80 silver was a joke. 6 months ago, it was a fantasy. A month ago, it was ambitious. Today, it is imminent. This is how markets move. They do not ask for permission. They do not wait for you to be ready. They just go. And if you are not positioned, you get left behind. The silver market in 2025 is the opportunity of a decade. It is the trade that will separate the prepared from the unprepared. It is the moment that rewards conviction and punishes hesitation. The buyers are relentless. The trend is undeniable. The target is higher. And the only question is whether you will be there when we arrive. $80 is coming. $84 is coming. And beyond that, levels that will make today's price look like a bargain. This is not hype. This is the math of a supply-constrained market meeting exponential demand. This is the physics of a monetary system in transition. This is the reality of 2025. Position yourself accordingly. Manage your leverage. Respect the volatility. Keep your eyes on $70 as support and $80 as the gateway. And when the breakout happens, do not let them shake you out. Do not let the first pullback scare you. Do not let the headlines confuse you. The trend is your friend. The trend is up. The trend will carry you to destinations that seemed impossible just 12 months ago. All you have to do is hold on. All you have to do is trust the process. All you have to do is survive the chop. The $80 barrier is the last obstacle. When it falls, the path to triple digits opens. And the shorts who have been fighting this rally will finally, mercifully, be put out of their misery. The breakout is coming. Be ready.